Welcome to DTNsights, the podcast where we explore the ideas, innovations, and market forces shaping agriculture today and tomorrow. I'm Gray Montgomery with DTN. Today, we're joined by David Fiocco, Senior Partner with McKinsey Company's Global Agriculture Practice. David works with agriculture companies, governments, and food system leaders around the world on digital transformation, sustainability, food security, and advanced analytics. David, thank you for joining us.
Thanks for having me, Gray. Looking forward to it.
All right. So David, I'm so excited to have you on the show because you have kind of the ability to sort of see the really big picture. You get to travel the world, you visit the very largest agribusinesses and see what is happening, good and bad, across agriculture. You also have the benefit of rubbing shoulders with colleagues that work in other industries and kind of get to learn from what's working well and what's not in those industries and apply it back into agriculture. When you step back and look at agriculture today, what feels fundamentally different compared to even 5 years ago?
You know, the last 5 years have been an incredible roller coaster. I think about 5 years ago, we were on the upswing of one of the biggest cycle ups that we've experienced in generations. We had growth everywhere. Commodity prices were healthy, yields were high, input costs were fairly low, and coming out of COVID and short supply chains, we were finally sort of back to normal. Then, say 21, 22 were years of incredible growth. 23, 24, 25, we saw things start to turn in 23. And by the back of 23 and into 24 and last year, we had some of the most challenging years this industry has experienced, again, in generations. It was amazing, the peak to trough we experienced. And now, in some ways, there are many parts of the industry that look a lot like where they looked 5 years ago, where we are coming back to growth. We have a level of renewed optimism in the fundamentals in the industry. And at the same time, I think we have more volatility in the industry driven by everything from geopolitics and trade dynamics to more volatile yields to increases in supply chain challenges that force every part of the value chain from farmers and upstream to input providers, all the way to grain traders and food companies, to bring a level of agility that we never really saw in this industry before. The speed of change, the speed of technology adoption, it's just much faster, and it's in a much tighter environment than it was 5 years ago. Now, this is agriculture, so nothing changes overnight. We'll get into, we have a lot of work to do on how do we actually adopt technology at scale. But net, I am optimistic that we've kind of ridden the boom and bust, and we're moving back up. But we're now in an environment that's way more challenging than it was before.
When we go to World AgriTech in 2020, 2021, those years were just high on enthusiasm about the state of AgTech and where things are headed. I can't say that it's felt quite the same level of excitement the last couple of years. AgTech seems to be in a funk. Is AgTech in a funk?
Well, I think there is more demand than ever for technology that creates value. And there is less willingness than ever for new ideas and quote unquote disruptors if the technology isn't able to really materially move the needle, whether it's for the farmer or for somebody in the value chain. So what there is less of is exploratory capital. We had plenty of Silicon Valley players from outside the industry putting lots of money into the space without necessarily understanding not just the technology, but how to drive adoption and change management at scale. I think that money has dried up. There haven't been at scale exits or returns from some of the larger unicorns in the space. But on the flip side, where I think we do see successes. There's a handful of proven players on everything from remote sensing and soil health to biologics to price and forecasting and hedging engines that are moving the needle. And we're starting to see AI and generative AI models really helping ag companies move further and faster. So, there's not as much exuberance as there was before, but the fundamental value coming from technology is gradually increasing.
When you look across the aisle to and have conversations with your colleagues and other in the other commodity practices, energy, metals, do you see like the same kinds of structure in the technology, SaaS, and data businesses in those sectors? Is there something that like AgTech is not doing right?
Yeah.
Versus other industries?
We had a AI adoption curve that my technology colleagues were showing, and agriculture and fisheries was in the very, very bottom of the chart in terms of actual technology adoption at scale. And it led to a really good discussion. Why? Because, most farmers I talk to, most grain traders I talk to aren't afraid of technology. They want technology that works, but it's not a resistance to the idea of technology. I think a couple of things stood out. One is the fundamental annual crop cycle for growers and the whole industry that's built around it slows the pace of technology change. You've got one shot wherever you sit on the value chain each year. And so we take incremental steps. It's very difficult to say, if you're in energy or chemicals, you have a continuous process, you have a cycle, you try a new technology, you can segregate a part of your plant, and if it works, great, and if not, you'll try something different, and then you can scale it overnight. There's no overnight scale up here. And many technologies, the nature of the technology we're talking about, AI, modeling, forecasting, it's iterative. So it's almost never perfect on its first go. So if you say we've got technology that needs iteration, and we have an industry that fundamentally only iterates once a year, we are structurally challenged to move as fast as many of us would like. I think, though, what is changing is there was so much friction 5 years ago to get started. Right? If you wanted to get land on a platform, you would often have to manually upload farm boundaries. You would then, have to really go match, individual data. Some of the tools, including the tools DTN is bringing to market, helps you create much larger scale data platforms where you can see land, you can understand the history on that land, you can tie the land to the farmer, you can see historical data in one place. And so we can experiment, we can iterate without having to wait a whole nother year. We have much larger trial data sets. And it used to be for many of our yield models, you'd have to ground truth by sending somebody out literally to go count kernels in the corn or, go check on what the harvest looks like. The quality of imagery has gotten way better. The ability to ground truth virtually is way higher than it used to be. So, I think we're solving a problem. There's reason for hope, but relative to industries that change overnight, find a technology that works and then can almost flip a switch and scale a factory, scale a geography, we do have to understand, what's going to fundamentally limit our pace of change.
So when you look across just like the ag tech world today, you see some companies that are thriving or even surviving, and you see some that are not or have not, past tense. What do you detect is like sort of common about those that are in the former group, the thrivers and survivors, versus the ag tech graveyard?
So the ag tech graveyard, it's evocative. You can we all can think of the logo sitting there. I think there's a couple of things. One is I might separate the technologies that are helping B2B players make a difference in their own value chain versus on farm. It is a much harder world to actually make a difference on farm at the acre and the sub-acre level, and the challenges of getting the accuracy so right that you are creating value for a farmer, who deeply knows their own piece of land, and then the challenges in go-to-market and the challenges in monetization on farm make that world much more challenging. So let me start on the B2B side.
Yep.
Here, I think when I see companies succeeding, it tends to be they're bringing a great functional capability and helping players along the value chain go faster. And I've seen it from R&D, helping manage trial data or registration data, supply chain, helping with forecasts and forecast accuracy and logistics management and logistics cost reduction, sales, creating commercial co-pilots, creating, tools that help on next product to sell, next product to buy, risk management, helping on hedging and trading and forecasting. These are places where we can bring experiences from other industries that have moved faster. We can bring proven data and formulas, and we can help drive functional value really quickly. And some of the simplest tools in procurement and in finance, we can see making 5, 10, 15% differences in company EBITDAs by applying these tools. Pricing is another great example. So those places where you're taking a function, you're bringing lessons that have worked in other industries, you're bringing great data, and you can show value creation in a 3 to 6 month period. Companies that are doing that have really moved quickly and are doing well, thriving, at least surviving. I think the places where we see challenges are first of all, on the farm, we see challenges when, we have ideas of big changes to simplify for a farmer or to help provide a farmer more data and insight, but don't really understand the workflow and the decision-making that a farmer has to follow. So I may give you a great point solution, but if it doesn't fit into how I use the equipment, it doesn't fit into how I purchase inputs, sure, that's a better prescription. But if I can't use that prescription, my willingness to pay for it is very small. And then I think the companies upstream that I've seen struggle are the ones that are trying to disrupt. And that's not to say that there's not room for disruption, but for example, saying, I'm going to create a marketplace so I no longer need ag retail or distribution, or I'm going to create a marketplace so I no longer need origination and traders in the field. The reality is, this industry thrives on having close connections and personal relationships and trying to just erase them versus creating tools that help the people that do this work for a living, make them better. The ones that focus on helping empower the originators and salespeople and traders and agronomists be better at their jobs tend to do better than those that are trying to erase those roles from the value chain.
So are you still bullish on AgTech? I mean, I know you're going to say yes, so I'll actually, instead of throwing you that softball, I'll say why.
I look at the speed of technological change, and I look at how much inefficiency there is in agriculture today. I'll throw out numbers that nobody would dispute. More than 50%, almost 70% of fertilizer applied to the plant runs off and never makes it to the plant. Almost 50% of food that is produced in the world is lost. It's wasted somewhere along the value chain. We have such massive inefficiencies, and we've been working on correcting, improving, continuous improvement, the old-fashioned way, literally for centuries. So the chance for technology to help us predict, forecast, optimize, get more precise in how we order, how we apply, how we produce, the opportunities are almost limitless. I said our sector was one of the slowest in terms of adoption, but it's one of the highest in terms of intrinsic opportunity of efficiency gains that are out there. And so, yes, I have to be an optimist, but I'm an optimist because I see the value. I know the value is there. I see how fast technology is changing. If the problem is really a go-to-market problem of, listening to end users, designing workflows that work, integrating with processes that exist today. We can solve that. That should be solvable.
Yeah. Looking ahead, what emerging technology, whether it be AI, precision ag, digitalization, sustainability, or something else entirely, do you believe will have the single biggest impact on the ag industry over the next 5 years?
I'm going to cheat. I'm not going to do single because there's a few that are moving the needle. But again, I'll do the for ag companies, and then I'll do for the farm. I think for ag companies, the chance to really lean into generative AI to, it's going to sound hokey, revolutionize processes, I think will move the needle. I'll take something simple, procurement. Today, ag companies often are creating RFPs manually and sending them to a dozen suppliers, whether you're in the chemistry space or you're in the food ingredient and processing space. If I can create the ability to tell suppliers what I need and get that need out to the world, take submissions from 100 potential suppliers and choose a favorite who I might not have heard of, using generative AI technologies at every stage along the way to, draft, collect, synthesize, analyze, manage processes. I can orchestrate a set of agents who are running that team. I'm not so excited about having fewer people in the industry. I think we'll still need people to manage this, but the technology will let those people be further, faster. I think the same thing on forecasting. So much of the industry is burned by an annual forecasting cycle where we're trying to, predict yields and inventories and storage, and then make decisions with imperfect yield data. Forecasting should be 100 times better than it is today, and I think that'll help every part of the value chain. So those, these kind of process innovations will help. Then when I look at on-farm, I'm really excited by what's happening. I've been a remote sensing fan for a very long time. I think now we can get imagery further, faster, cheaper, and it's letting us predict and understand what's going on in a field before there are issues or problems, and get in front of making supply chain and logistics decisions based on what we're seeing. And I'm a really big fan of this technology. Has been early for a while, but the potential for much more granular soil measurements and soil health, soil spectroscopy, to understand what's going on and then to tailor fertilizer, biological prescriptions to help make better real-time nutrient management choices, I think are going to be real step changes for us. One more and then I'll stop. I think on the downstream side, on trading and analytics, so much of this industry is risk management, and the ability to use tools to see and measure risk. We published an article earlier this week that was pointing out the profit pools in ag trading are declining. The reason those profit pools are declining is we have better information. So instead of wild swings and huge arbitrage and essentially smart guessing in trading, we have really precise data and really micro markets that help us understand exactly what's going on. The more companies can use that data and use it quickly, again, from a farmer all the way to a food company, small to large, the better they're able to make decisions. So maybe that was 6 or 7, but I think there's a lot of technologies here that will move the needle in the years to come.
Yeah, well, I'm glad to hear that last one. That's obviously one that we've been spending a lot of time on here at DTN. There's no shortage of ag data or ag data providers. There may, however, be a shortage of high quality, actionable data. Where do you see gaps and opportunity specifically in the ag data and insights landscape?
Yeah. So I see we're getting better, but I mentioned imagery. Imagery used to be prohibitively expensive or not granular enough to make decisions. I think as we get better with satellite and hyperspectral data, we'll be able to make more and better decisions, but the imagery is quite valuable. I think there's and this is funny enough, much more of a demographic piece, but I think there's a disconnect between understanding the farmer and understanding what's going on land. A farmer or a farm is an enterprise with credit scores and human behaviors and decisions. A farm is a agronomic factory that performance is determined by weather and soil and precise geolocation. The best decisions, whether it's on how much credit to give a farmer or what inputs that farmer should use or what trading opportunities and contracting that farmer should experience, the best opportunities come when I can put agronomic and demographic data together. I think we have an opportunity, and AI is giving us tools to weave together different data sets in much more intricate, granular ways than we used to be able to. But whoever gets that data connected faster is going to be able to make better decisions first.
Yeah, I mean that's something that I've thought as long as I've been in the ag tech space is that it seems like a sector that's just very. I mean, one of the answers I think to my first question about sort of what's wrong with ag tech is that it's always sort of seemed very subscale. It's always seemed like it was a lot of just point solutions that sort of optimized for a certain little thing. And nobody really sort of was able to connect the daisy chain of supply chain data to provide, sort of the sense of the bigger picture of, I mean, and one, I'm biased to this because it's what we're sort of obsessed with here, but, what is, can we build a digital twin of agriculture? Can we literally, just sort of show all the activities that are happening on the map and then use that so that way it creates better transparency as to what is sort of the opportunity for various players, whether you be an upstream player, a farmer, or a downstream player, to transact with better intelligence.
You said it really well. We had so many, we tracked point solutions. There were 3,000 to 4,000 point solutions in ag tech a few years ago. I liked many of them. The problem with a point solution that stands by itself is the value it actually creates is quite limited. And most players, no matter how smart and sophisticated they are, can only weave together a handful of tools and insights. And it's not, I think you don't want to take this too far and say that the winners are going to build all singing, all dancing, magic solutions that will do everything for a farmer. I don't think that exists, but we've got to get, end-to-end workflows. If it's, 4 or 5 solutions together that help you really make a better decision on the field or for trading or for financial management. And that's what we've been lacking.
It's the move from basically optimizing a task or even digitizing a task to having integrated intelligence. It's connecting a bunch of systems to get you to the big so what, which is like, if I do this one little thing over here, how does it impact the ultimate thing, which is my profit?
My technology colleagues will talk about the death of use cases. That anybody that comes to you that tells you they have a very powerful use case and they get stuck and stop at the use case isn't really going to create value for you. It has to be a domain. The 4 to 6 use cases you can put together that are really grounded in the decisions you're making. If you're a farmer, you're making planting and crop management decisions. You're making harvesting and trading decisions. You need tools that help you tackle that decision holistically.
Yeah. I think that is sort of a next big horizon in ag tech is just sort of how we kind of go from the subscale micro decisions to the big so what's, the domain, as you say. Let's transition. Obviously, there's just a tremendous amount of AI right now. McKinsey's, you all had this From Bytes to Bushels report, which estimates that generative AI could create roughly $100 billion in annual on-farm value, and then another 150 billion across the broader agriculture value chain. That's enormous. Me saying that's enormous feels like an understatement. So where do you believe the first real business value from generative AI shows up in agriculture?
There's going to be a lot of overlap here with what I was saying on AgTech generally. I think the value when we map in bytes to bushels, the biggest numbers came from the least sexy areas. It was really forecasting. You have so much inventory and working capital in the ag industry. So if generative AI forecasts help you bring in data from any number of places and get better, that was a huge source of value. Pricing was another one. If you say we often set prices once a year on inputs, that's not good for the farmer. That's not good for the company. We have to be much more dynamic in how we think about pricing to value. So I think we'll see it's going to show up there first. It'll show up off the farm. It'll show up with helping companies modernize and make better decisions. I think you'll also see, and this may be slightly harder to quantify, but even in a relationship-driven world, we are relatively inefficient in our customer service and support across the value chain. So some of the best AI and generative AI use cases are helping you figure out where's your supply and your orders at any given time. And so I think we'll see customer success organizations shift dramatically. I also think the AI and so some of this is more machine learning, deep learning, computer vision, but we're seeing it in equipment. We're seeing equipment get smarter. We're seeing the ability to think, see and spray, and precision optimization, helping the equipment move much faster. So when we value how much happens here from equipment moving the space of decision down to the subfield and the pixel level, that's really valuable. And then, off board, the data that's happening in the ecosystem, similarly, I think can help us avoid some of the post-harvest losses and waste I talked about before.
I talked to a ton of agribusinesses and there's kind of two types. There's the types who are like, AI, I read about it. But I'm actually honestly struck by how many will say, even kind of the mid-sized and smaller operators, I've got this AI test going on. And so what I would say, I guess, to translate this a bit, I kind of feel like we're in the trying things out phase with AI. But the way it's being done is it's sort of, we're trying out this thing and it's over here. It's trying out and it's doing this one kind of use case. Is that the best way to approach this for an agribusiness, or is there a more thoughtful way for organizations to be tackling the AI opportunity right now?
We talk about a T. We say AI can deliver personal productivity, for across a broad area of work that you do. Whether you're a farmer or a company. Look, for an employee at an agribusiness, from writing emails to creating presentations to synthesizing reports, experimenting with AI will help in individual productivity a lot. And then take that one step further and use AI orchestration to help you really pressure test decisions you're making on product advancement or on field trial management or on sales campaigns and promotions and collateral development. So I think all those things are good. Everybody can find a bit of personal productivity. The challenge there is making everybody 5 to 10% more efficient adds up to a lot of theoretical hours, but not a huge amount of value on the balance sheet. You would have to really use that value differently. And actually, you can end up spending a lot of money to give everybody better tools. And unless you then are very thoughtful about how you work differently as a company and how you prioritize your resources, you might just have added cost. So I'm not against, in fact, I'm very strongly in favor of allowing companies and organizations to experiment and adopt as many tools as they can. But the companies that we see that are really moving the needle, seeing 20 to 30% improvements in EBITDA, are the companies that choose a couple of domains and they say, we're going to go end to end in reimagining our processes. We're not going to take the 30 steps that we have today to do our forecasting and seed planting decisions. We're not going to make each of those 30 steps a little bit better. We're going to step back and say, do we really need all 30 of those steps? Or if we have, a set of agents that can assimilate historical data, predict future demand, and plan, we could do this in a far faster, far more efficient, far fewer steps ways. We just published a book, my colleagues kind of who look across industries, called Rewired, the second edition of Rewired, and it's showing where we've seen step changes. It's a fascinating story, as I've read about the companies in that book, who reinvented their supply chain, rethought through their sales and commercial processes, didn't actually save that many people, but made every step so much better and more efficient that they saw, really order of magnitude changes in productivity and performance.
Yeah, I mean, this period, I think of it, and I welcome you to push back on me in any way, but I look at this as sort of the kind of epical change, similar to the shift from the 20th century industrial era to the digital era. And the lesson from that is that obviously there was a lot of disruption, a lot of companies that went under or became shadows of their former selves. The key, it seemed to me, in that was that those companies that saw that for what it was, the digital revolution, went just completely all in and sort of said, what is my value proposition to the customer look like in a digital world, and re-architected everything. We're ultimately thrived in it. I mean, it's Walmart. Walmart could have just gotten their butts kicked by Amazon, but because they invested so heavily in Walmart.com and sort of thinking about how to digitize their entire supply chain, came out the other side much stronger for it. And so I tend to think that right now, experimenting is good, on a certain, having these little tests is okay, but the real winners are going to be those that do kind of what you're suggesting, which is, just sort of think through what is this entire process? What is this entire bargain with the customer that we currently have? How's our current value proposition to the customer change? How can we make it so much better if we empower AI and we infuse AI throughout that process?
Great, I agree, and maybe I agree and I disagree. So here's what I'd say. I think the potential for transformation is enormous. Whether or not we will capitalize it in agriculture, I don't know. And when I look back over the last 20 years, agriculture companies have dramatically underperformed the stock market and have lagged in creating economic value. And a big reason is I think we get stuck in our commodity cycles, and we invest and then we pull back, and then we invest and we pull back. And we did not lean into value creation in the early ages of digital in the way banking and technology and financial services companies did. And as a result, we didn't fundamentally change our efficiency and performance. So will we take advantage of it now? I hope so. I think some companies will, and there'll be an opportunity to move the needle, but we really will have to lean into uncomfortable change management and adoption here.
Are there companies right now that are making significant ROI on AI investments? I keep reading these stories, and they're not ag specific, but all these companies are laying off all these people thinking they're going to, just be able to use AI instead of humans for all these things. And it's supposed to create all this, new value. But the reality is that it's not. And the CEO interviews are indicated, confidential CEO interviews indicate as such. Are you seeing examples of agribusinesses making significant ROI on AI investments yet?
I think it's too early certainly for agribusinesses. I've seen in a few industrial companies, I've seen supply chains that are running with 30 or 40% less working capital based on really leaning into the forecast. And here I can't help but look at players like Amazon, who've totally revolutionized the efficiency of supply chains, and dynamic network optimization and inventory management and pricing. I think if we look at what tech companies are doing in that space, they've created a ton of value. And again, I wouldn't look for the value creation being in number of people laid off, because I think you will actually spend as much or more in the new capabilities you need to be successful in this space. But it's can I then do the work more efficiently, more effectively?
I think, one of the things I would probably push back on you on is that the lesson from the digital era also is that whether you are a farmer or you are an agribusiness, is those that, and you see this in the publicly traded companies, but you also see it anecdotally with individual farmers, those that have leaned into technology, that have been early adopters, have generally outperformed. You see it, and so ag as a whole, lagged in technology adoption, and it paid for it in its returns over its stock returns over the last 25 years. However, that's not even. That's not even distributed at all. And you see winners and losers, and the winners are those that generally, not always, but generally did. In a sector that is generally operates throughout the entire supply chain, but particularly with farmers in the downstream on such narrow margins, the opportunity that at minimum digital, but if not AI, but certainly, just sort of using these various technologies to optimize, not for just cutting jobs, but for acting in more intelligent ways, taking advantage of more effective pricing opportunities, seems profound when your margins are 2%, 3%.
You can, to go from 2% margins to 3% margins is a 50% improvement, right? So I agree with you. I think those that lean in, it's interesting when my colleagues also looked at commonalities. They did this set of case studies between who had done the best in the digital era and who was doing the best now. And it turned out, maybe this isn't a surprise in retrospect, it's many of the same players. Those that adopted digital first now have the foundations and can move quickly in AI. I think, that you got to avoid the trap of, I've never thought about my data. I've never cared about my data. I've never cleaned it up. I've never governed it. But now AI is going to let me skip all that and get rid of systems of records, and, I'll leapfrog. There's no magic bullet here. You got to do the hard work. I think we do see a few companies in the sector, and the companies that are better at this are the R&D companies, because, they have a real heritage of data management and tracking. And if you're running a breeding program or a formulation program, you have terabytes of data to manage that. The question just for them is, how do you apply it to the rest of the company and your supply chain and your commercial business? By the way, the big grain traders, I say this all the time, they're amazing at trading, and they use terabytes of data to trade. If we could use a fraction of that data to drive operations and commercial decisions and marketing decisions, we'd also create a bunch of value. So that's going to be part of this, is really thinking about the end-to-end domain improvements.
All right, last one for you. When you look ahead 10 years, what does the successful agribusiness company look like?
There's a whole bunch of things I don't know about. Autonomy, electrification, how far these new technologies will go. But in 10 years, I think we will, it will be a little early for any of those to have reached full scale. So when I look ahead in 10 years, I see the companies that have taken humans out of the loop in many of their basic processes. They'll have amazing forecasting. They'll have dynamic networks that adjust to match weather volatility and geopolitics and trade, and they'll be able to respond not just once a year, but in season multiple times as things change. They'll still have. We're not gonna lose trusted advisors, whether those are sales agronomists or grain originators. But everybody that works for the winners are gonna have the tools at their fingertips to make great decisions in the field real time, and they'll be able to talk and engage, with those tools. To be smart every day, and those tools will live right on the front line, and we'll have way less support and management in the back.
David, this has been fun. Thank you for such a fascinating conversation. I feel smarter. And
Thanks for hosting. This was always exciting.
All right. And again, thank you all for joining us again on DT Insights.